afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 29th of August and we have Charu Chanana, market strategist from Saxo Markets, coming to us out of Singapore. Charu, as always, great to have you on the show on the Tuesday.
It's a pleasure, Brian. Thank you for having me.
Now, Charu, before we get your insights, we'll take a look and see how markets across the region have performed. But we start first with cryptocurrency. Bitcoin is just above the 26,000 mark. It's at 26,054, up 0.12%. Ethereum is at 1,650. It's up 0.04%. Now, looking across to the market numbers, the Straits Times Index, and that's where you're at, is up 0.35%. We've got Bursa Malaysia, which is up 0.43%. Shanghai is up 1.24%. ASX All Ordinaries is up 0.42%. The Nikkei is up 0.27%. The Hang Seng is up a whopping 2.17%. And rounding up the numbers, we've got the Kospi, which is up 0.33%. Charu, your views on market performance in the first half of the day amid this sea of green?
Yes, absolutely. I think some bit of it is certainly coming from that overnight. We saw some bit of recovery in the risk sentiment. Wall Street closed higher as well, despite getting some hawkish remarks at the Jackson Hole conference on Friday and Saturday. I think the markets have understood higher for longer now that most central bankers are trying to convey. But of course, I think the big focus remains on data for the policy direction from here. And we get a ton of data this week, which is extremely relevant. In the US, we get PCE inflation data, we get NFP jobs data, extremely important later on in the week. In the Eurozone as well, we get the CPI, which can be a big input for the September policy meeting. So I think some bit of just kind of waiting for those data points to play out. But also, I would say I think the Asia sentiment is helped by the China stimulus announcements as well, where yesterday we saw some new measures being announced. Although the impact of those measures kind of faded into the close of the session, I think the investors are now trying to move that China narrative from stimulus being too little, too late, to being more serious about supporting the economy. So I think that shift really, if it was to happen in a more pronounced way, potentially has a lot of room to run, to provide support to China markets and then overall to the Asian markets as well as a spillover.
Charu, so I want to take you up on that, the China market story. One of the reasons why investors are not convinced, as you alluded to earlier, is the fact that the stimulus numbers have been literally drip-fed into the system. There hasn't been a big bang. Well, obviously the huge bang like in 2008, 2009, but really in this case, it's really been a series of slow, steady measures which have failed to convince investors. What would it take really to move the needle?
Certainly, Brian, one of the reasons is it's been too slow. But also one of the other reasons, and Brian, you and I have discussed this offline as well, about the kind of challenges China is facing. Is it very similar to what we saw in Japan earlier, a few decades back? So, I think it is an issue of confidence in Chinese households, in Chinese corporates, and given the focus of Chinese authorities on deleveraging since 2016, I think that sentiment has really, digged deep down in the minds of Chinese consumers and the Chinese corporates. So even with those rate cuts, they are not ready to take up fresh loans. And secondly, I think the big risk that we are seeing in the Chinese economy is also the health of their banking sector, where there is not enough capital adequacy. So if you pass on some rate cuts, it kind of just makes matters even more worse. So that obviously keeps the banks also reluctant to pass on whatever rate cuts the Chinese authorities have announced over this past few months, right? So certainly, I think it is something of a very different level. It is a structural issue which these measures are unable to address, and that's why I think the focus has now shifted towards what more can Chinese authorities do? And like I said, with yesterday's measures as well, the stamp duty cuts being announced for the first time since 2008, it certainly looks like the Chinese authorities are digging deeper into their, kitty bag to kind of find out what measures could really work. So that is helping to improve the sentiment a little bit right now. But again, we get PMIs this week, and they can really be nasty. If they are, I mean, I'm sure this would mean that this turnaround in sentiment may not last long enough, unless, of course, we see some fresh measures again.
Now, Charu, you talked about Japan earlier, and the Japanese numbers today are disappointed. The Japanese unemployment numbers came in below expectations. I mean, given the bullishness around Japan right now, what are your thoughts at Saxo in terms of today's numbers?
Yeah, absolutely. The job market data certainly is supportive of the fact that the BOJ may want to continue to wait and see how wage gains materialize. So we saw the unemployment rate higher at 2.7% from 2.5% last month, and that was what was expected for this month as well. And we saw the job to applicant ratio down a little bit to 1.29 from 1.30, which means that there are some signs of a loosening in the labor market. And surprisingly, Brian, I think it is interesting to know that this comes at a time when we are talking about a rebuilding of travel demand for Japan, right? With China restarting its group tours and the National Day holiday approaching in China as well. This is a time when a lot of Chinese students actually go into Japan, and there's a huge amount of inflow expected. At that time, the services sector in Japan is not hiring at an aggressive pace, is a little bit of a surprise. So I think we certainly need to watch whether the services side of the economy continues to hold up. We continue to see inflationary pressures, which could translate into wage gains, because that's the only thing that will prompt the Bank of Japan to tweak its monetary policy.
Now, on a different note, I want to look at gas prices. We've had strikes in Australia, particularly at plants in the Western Australia, in the Pilbara, at Chevron. How is this potentially going to impact gas prices globally?
Yes, Brian, there are some threats coming in from Chevron's LNG workers now. Last week, we had some from Woodside, which caused a huge amount of disruption in the in the LNG markets, I should say. But actually, I mean, if you look at it, I mean, of course, there is a threat that Chevron workers might also go on strike starting next week. But Chevron contributes about 5% to global LNG supplies, compared to Woodside, which contributes about 11% or so. So certainly the threat is more limited now, although there are speculations that the resolution that we saw with the Woodside issue may not be replicated with the Chevron workers as well. So certainly I think there is a scope for some wild swings again in the gas market, in the European gas market particularly. But I think I would say that if you look at the storage facilities at this time of the year, usually storage is a little bit lesser compared to what we have this year. So I think, Europe is still kind of getting ready to face a harsh winter if one was to happen. And potentially these wild swings would be, limited to what headlines we get out of Australia's LNG makers. But otherwise, I don't think they would have a more sustainable impact on the gas markets.
On that note, Charu, thank you very much for your insights. Thanks for coming on the show.
Thank you for having me, Brian.
I'm Brian Fernandez, and we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.